Okay, so let's talk about Wells Fargo. For years, it felt like all you heard were stories about crisis and controversy, right? Well, that whole narrative just got a major rewrite. They've just posted an absolutely blockbuster year. So the big question is, how on earth did they pull off this comeback in 2025? Let's get into it.
And honestly, there's no better place to start than with this number. Just look at it. $21.3 billion. That's their net income for 2025. I mean, if you're looking for a signal that something big has changed, this is it. It tells you the momentum is real, and their strategy, it's paying off, big time.
So yeah, that number naturally leads to the big question. I mean, this is a company that's been under a microscope, intense scrutiny, regulatory pressure, you name it, for years. So what changed? What was the secret sauce here? How did they manage to pull off this kind of turnaround?
Well, to really get to the bottom of it, you have to zoom in on one specific event in 2025. And when I say it changed everything, I mean it really changed everything for the company.
Okay, so for what felt like forever, Wells Fargo was kind of operating with one hand tied behind its back. The Federal Reserve had put this thing called an asset cap on them, which basically put a hard ceiling on how much they could grow. But in 2025, that cap was finally lifted. And just like that, the floodgates were open. They could expand their balance sheet for the first time in a very long time.
And hey, don't just take my word for it. The company's own leadership called it a pivotal moment. And you got to understand, this wasn't just some small regulatory adjustment. No, this was the big one. The green light they had been fighting for years. So they get the green light. What happens next? Boom! An immediate, stunning 11% growth in assets compared to the year before. I mean, that just shows you how ready they were. They didn't waste a second capitalizing on this newfound freedom, you know? They started growing loans and putting money to work right away.
But that pivotal moment, that was really just the opening act. It set the stage for what turned out to be a really impressive financial performance across the entire company. So let's dive in and take a look at the scorecard for 2025.
And what you see right away is that this success wasn't just from one little corner of the bank. It was totally broad-based. Let's run through the numbers. Diluted earnings per share, up a solid 17%. That core fee-based revenue, up 5%, which tells you people are actually using their services. And check this out, on the risk side of things, their net charge-offs, that's basically bad loans they have to write off, actually went down by 16%. That's a huge sign of a healthy business. And to top it all off, they returned a massive $23 billion to their shareholders. Just incredible.
So, you're probably wondering, how did they pull off numbers like that? It wasn't just about the asset cap being lifted, though that was huge. Now, behind the scenes, there was this very deliberate long-term strategy playing out, and it was really made up of two key parts that worked together.
And this slide, I think, just lays it out perfectly. It's this two-pronged approach. On one side, you have this relentless focus on getting leaner. I mean, think about it. 22 straight quarters of reducing headcount. That's over 5 years of discipline. And then on the other side, they were getting ready to grow, just waiting for that asset cap to be removed. It's a classic 1-2 punch, right? Cut costs, get efficient, and then when the opportunity comes, you pounce. And here's the really smart part. The money they saved from all that cost cutting, they didn't just let it sit there. They plowed it right back into the business to fund new growth. And this creates this amazing cycle that financial folks call positive operating leverage. It's kind of the holy grail for any company, really. All it means is that your income is growing a whole lot faster than your costs are. And that's exactly where you want to be.
Okay, so with that strategy humming along and the big regulatory hurdle out of the way, all of their growth engines just started firing on all cylinders. And again, this wasn't just in one area. This growth was popping up all over the place.
I mean, just take a look at some of these highlights. In credit cards, they opened a nearly 3 million new accounts. Wow. Their auto lending business, which they'd actually pulled back on for a while, came roaring back with 19% loan growth. Then you look at something super competitive like investment banking, and they jumped 4 spots in the US M&A rankings. That's a big deal. And maybe most importantly for the future, 50% of all new checking accounts were opened digitally. That tells you their tech investments are really starting to pay off.
This chart here gives us a really nice snapshot of what was happening on the consumer side. You can see it right there. New credit card accounts up a whopping 21%. The balances for their high-end premier clients up 14%. And they brought in another 1.4 million active mobile customers. You know, each one of these bars is basically a report card, showing that a key part of their consumer strategy was absolutely hitting the mark.
So yeah, a fantastic year, no doubt about it. But with any great comeback story, the next question is always, Can it last? Is it sustainable? So what's the plan? What's Wells Fargo going to do next to keep this incredible momentum going?
To get a handle on their future goals, we've got to talk about one key metric. You'll hear it a lot. It's called ROCE, which stands for Return on Common Equity. The easiest way to think about it is like a report card for how profitable a bank is. It basically answers the question, how good are you at turning shareholders' money into more money? The higher the number, the better your grade. And this timeline, this tells the whole story of their transformation. If you go back to 2020, their ROCE was just 8%. So they set a goal of 10%. They hit it. Then they raised the bar to 15%. And in 2025, they hit that too. But here's the thing, they're not stopping to celebrate. They've already set a new goal for the medium term, 17 to 18%. So how do they get there? Well, they've got a pretty clear three-part plan. And you'll notice it's basically just doubling down on what's already working. First, keep a super tight lid on expenses. Second, start cashing in on the benefits from all those growth investments they've made. And third, just keep getting smarter and more efficient with how they manage their capital. It's not rocket science, right? There are no magic tricks here, just really disciplined execution.
But I think this quote really tells you everything you need to know about their mindset right now. That 17 to 18% target, that's not the finish line for them. They see it as just another stop along the way. Their ultimate goal is to achieve, and I'm quoting here, best-in-class returns. You hear that? The ambition is no longer just about recovery. It's about leading the pack.
And that brings us to the final question, and it's a big one. 2025 was, without a doubt, the year of the comeback for Wells Fargo. But now, with all these pieces falling into place and their transformation picking up speed, the real question is this: can they make that leap? Can they go from being a great comeback story to being a true, undisputed leader in the market? I guess only time will tell.